Rising fuel prices and growing concerns over the use of fossil fuels are driving demand for electric vehicles. Global EV sales shot up from 2.1 million units in 2020 to 4.5 million last year. While the likes of Tesla and China's SAIC motor are leading the pack, many conventional automakers are also entering the race to go electric. But as Ives reports, a global shortage of microchips could slam the brakes on their plans.
Car makers are betting big on electric vehicles. This week, the Renault-Mitsubishi-Nissan alliance announced it's investing around $26 billion in electrification over the next 5 years.
We have aligned roadmaps on EV battery technologies, leading, amongst others, to the selection of a common battery supplier for Renault and Nissan in France, UK and Japan. We have defined a common vision on electric and electronic architecture. Between now and 2030, the alliance's momentum will expand at a pace it has never experienced in the past.
The alliance plans to launch 35 new EVs by 2030. Meanwhile, US carmaker General Motors says it's expanding its electric pickup truck production and building a new EV battery cell plant. It plans to build 1 million electric vehicles by 2025 and overtake Tesla as the top-selling EV maker in North America.
I am thrilled to announce that General Motors will invest more than $7 billion across 4 Michigan manufacturing sites, creating 4,000 jobs and significantly increasing our battery cell and electric truck manufacturing capacity.
In December, the world's top-selling car maker Toyota also unveiled a more ambitious plan for its electric vehicle business, hiking its EV sales goal by 75% to 3.5 million units a year by 2030. German auto giant Volkswagen says it will bulk up its investment in electric vehicles and digitalization to $99 billion over the next 5 years. And luxury brands are following suit. Bentley Motors announced it's investing $3.4 billion in the technology, with plans to roll out a new EV every year from 2025 and become an exclusively EV maker by the end of the decade. Electric cars made up more than 6% of global vehicle sales last year, tripling their market share from 2019. But an ongoing global chip shortage threatens to slam on the brakes. Tesla says it's ditching plans to launch new models this year due to the shortage, and Renault expects to cut output by 500,000 cars for the same reason. Chip makers like Nvidia and AMD have suggested the shortage won't ease until the second half of 2022, while Intel has said it might not end until next year. The US government has warned that the country's microchip stocks are critically low.
We're going to kickstart new batteries, materials, and parts production and recycling, boosting the manufacturing of clean vehicles with new loans and new tax credits, creating new purchase incentives for consumers to buy American-made, union-made clean vehicles.
Governments are prioritizing the transition to EVs in an effort to slash carbon emissions, with some offering incentives on EV purchases and paying for charging points. Analysts predict electric cars will account for more than 60% of vehicle sales in France, Germany and the UK by the end of the decade. As many conventional car makers enter the EV market, the road ahead still poses some challenges. Taiba Aydin, TRT World.
For more on this, we're now joined by Daniel Ives in New York. He's the managing director of Wedbush Securities. Thank you for being with us today. Daniel, first of all, how worrying is this global shortage of microchips, and how long would it take, in your opinion, for the situation to return to normal?
Well, I think right now, there's a massive transformation going on with electric vehicles, biggest transformation to the auto industry since 1950s. But the chip shortage, that's really what's crashing the party here, delaying a lot of the growth by anywhere from 6 to 9 months. A lot of these new models that were supposed to come out, not going to come out until 2023. It's a dark cloud over the sector, but in our opinion, it doesn't change the long-term trends. But obviously, investors are worried in the near term.
Right, Daniel, Tesla is now leading the pack, but significant competition from traditional automakers is on the way. Who has an edge? Who will win this battle?
Well, I think overall, I mean, Tesla, at least in the EV market, it's Tesla's world and everyone else is paying rent. So they're going to continue to have really an ironclad grip in terms of market share globally. A lot of that's distribution in terms of what they build out in Giga Shanghai, what they're doing in Austin, and what they'll be doing in Berlin. But when you look at the stalwart, Ford, GM, as well as VW, I think that they're going to make significant gains in terms of EV market share. And this is not a zero-sum game. There's going to be many winners. We think there's a $5 trillion green tidal wave over the next decade.
Interesting, not a zero-sum game, but in a way, do you think that traditional car makers have some sort of competitive advantage because of their multi-decade experience with car productions and in a way, their economies of scale?
Definitely. I mean, I think if you look at the big inhibitor here, when you look at a lot of the startup, the Lucid Motors, the Canoes, the Fiskars, it's distribution. So when you look at some of the Detroit stalwarts like Ford and GM in particular, they have massive distribution, massive engineering, factory build out. You're going to see about $500 billion spent on the conversions over the coming years. And that's what it's really going after today in terms of EVs. You're going to start to see some clear winners and losers over the coming years. But no doubt, the chip shortage right now, that's sort of been I'd say the biggest fear in the overall market. I think Tesla fanned those flames on their conference call.
Absolutely, and actually on Tesla, I mean, something interesting that I think happened this week. Some analysts have called Tesla a cash machine after the company published its Q4 results, which were impressive. But the stock has lost more than 11% since publishing its earnings. I mean, what is it that let investors down?
Well, I think Musk did a pretty bad job handling that conference call. Take a step back. Fear is across the market in this Fed rising rate environment, valuation scrutiny. And Musk on the call, I think, was a little flippant, talking about robots and also really scaring a lot of investors about the supply chain. And here it is 24 hours later, Apple comes out saying the exact opposite. So I think that's what really sent the stock going down. Also, no new models will be introduced in 2022. Not a shock, but why? Because of the supply chain. And in this risk off, that's what you start to see in Tesla stock.
Daniel Ives, thank you for being with us today.
Thank you.